Well, as you know, we are in an industry where scale matters. You need to combine two elements: the scale that enables us to, to serve our clients globally, and at the same time, the independence, which avoids the kind of conflict of interest that you find in the world of banking. With this merger and with our combined 24, 25 billion of assets under management on both sides of the Atlantic, we now have the scale. We will be 150 people worldwide. The research team is significantly bolstered, covering all asset classes. But at the same time, we keep our DNA of independence in place, which means that we do not sell products to clients as opposed to what banks are doing. We are in the business of advising clients from a standpoint of independence. We also invest our personal money alongside clients, which is, as you probably know, a rare thing in the industry today, and no longer practiced in the world of banking. And last but not least, everyone in our industry talks about capital preservation, wealth preservation. And the industry forgets that it's not just about capital preservation, it is also about wealth creation. It is important to have both sides within the same firm. One side that invests in the public markets with a view to generating inflation plus 4% returns over a cycle. But it is also important to have the wealth creation side, which means targeting much higher returns, taking a bit more risk through private equity, real estate investments, and these kind of asset classes. At Stanhope and post-merger, we will cover the waterfront from liquid asset classes to illiquid asset classes.
It's a good distinction, return on capital versus return of capital, isn't it, Daniel? But there's a real trend going on in the industry to restructure at this point, and we were following the fortunes of York earlier in the week too, around Europe and its hedge fund exposure here. But I want to talk about what's happening because the pressures feel like they've been the same in recent years. Increased competition, low interest rates, regulation to contend with the cost of that. Then we've had the pandemic. So what's changed with the COVID-19 crisis and how much more difficult has that made it for the industry?
Well, I think that what's changed is that people, clients and the industry is increasingly aware of the need to be nimble, to invest globally, to have flexibility. To give you a few examples in terms of investment strategy, as you well know, for the last few years, the US stock market outperformed every other market by a very wide margin. Over the last 10 years, the US stock market has performed 3 times better than the European market. And that really is explained by the weight of technology in the US and the weight of the data giants, the FANGs. And that's great. And in 2020, you've seen a market that was absolutely polarized between these top performers and the rest of the market. As we are shifting into a different cycle, and that's really that really is the result of COVID and the vaccines arriving and the perspective of higher GDP growth in 2021. As we are shifting into this new paradigm, what you're seeing is obviously a sector rotation. Now, we are not in the camp of thinking that it is the end of tech. Absolutely not. And people who, we are predicting a massive correction in tech and quality growth, I think are making a big mistake. But we are in the camp of people who believe that the leadership of the market will be much more balanced going forward, not just in the world of growth, not just in the world of tech, but also in the world of cyclicals, in the world of industrials. And so it is important to be able to shift. And guess what? The US outperformed because it was a leader in tech. There is a chance that Europe, which has lagged behind, but which is full of industrials and cyclicals, it could very well be that in early 2021, you will see Europe suddenly outperforming and doing well. Hence the need to be nimble and global. You need to change your portfolios. You need to adapt your strategy to seize the opportunities when they happen.